This is a preview video here at XM.com. Thank you for joining us. The Bank of Canada became the first major central bank to pause its tightening cycle. Now, could it be the first to cut rates as well? I'm Cristina Marujo. With me today is our senior investment analyst, Geralambos Pisuros. Geralambos, although the consensus is for the Bank of Canada to hold its rate unchanged when it meets on Wednesday, markets still assign a small probability for a rate cut. How possible is this scenario given the latest economic data out of Canada?
Hello, Christina. In my opinion, there is nothing justifying a rate reduction at this gathering. Yes, after the last meeting, data showed that most inflation metrics in Canada slowed by more than expected, prompting investors to assign an almost 15% probability for a rate cut at this gathering, and also more than 25 basis points worth of rate reductions for the rest of the year. However, on Thursday, the employment report confirmed that the Canadian labour market remains tight, while according to the Bank of Canada Business Outlook survey for the first quarter, which was released last Monday, the number of businesses anticipating a mild recession next year is smaller compared to the prior quarter. As for inflation, although expectations moderated, firms still see inflation well above 2% until at least 2025. So, all this data does not justify expectations of rate reductions. Yes, the full effect of prior hikes is not yet fully transmitted to the real economy, but there is no evidence that inflation will return to 2% soon and allow the bank to start considering rate reductions.
And now turning to the market reaction, the Loonie has been under pressure lately. How could it perform on the Bank of Canada meeting coming up this week?
Now, if the bank indeed decides to stand pat, traders are likely to turn their attention to the accompanying statement and the updated economic projections for clues and hints on whether rate cuts are indeed possible later this year. Anything confirming their view could weigh on the Loonie. However, as I already noted, according to the data we have in hand, that doesn't seem to be the most likely outcome. Officials have ample reasons to push against rate reductions for this year, which could help the Canadian dollar gain ground. Now, whether the currency can hold on to its strength may depend on whether market participants will put full trust in the bank's words and continue pricing in some basis points worth of rate cuts by the end of this year. From a technical standpoint, dollar Loonie is hovering near a key resistance crossroads, the crossroads of the uptrend line drawn from the low of June 8th, the 135.25 level, and the 100-day exponential moving average, which implies that sellers could, in other words, Loonie buyers could indeed jump back into the action soon.
Geralambos, thanks so much. The Bank of Canada meets on Wednesday. Thank you for watching this video here at XM.com.